want to welcome on today's guest, Mish Schneider. Mish is the chief strategist at marketgauge, coming to us from Santa Fe, New Mexico. In the new digs down there, Mish, which look fantastic. Good to have you back on the show. How are you as we kick off Q2 here?
I'm very happy right now because making money has been relatively easy, especially in the commodities world. Number one. Two, the weather is gorgeous. And number three, it's your birthday.
You're kind to celebrate all three of those things, and I would agree. All good news around there. You mentioned, commodities. We'll talk about a number of things. Credit to you earlier this year when you and I have spoken as part of our market outlooks, and in other words, you've often mentioned of strength in commodities. It's really starting to materialize here. So congrats on that. I think that was well played by you. We have a series of charts that really highlight, I think, some of your proprietary indicators that we have on the Stock Charts platform, but really talk about some opportunities in a couple different areas. We'll start with the currency market. We're looking at the Swiss franc. This is using an ETF called FXF, and we're starting with your weekly chart. Talk us through what you're seeing here.
Well, and by the way, if you want to trade it through a futures, it's CHF, just mentioning. And I always look at the underlying before I make a decision on buying an ETF. And of course, there's always issues. One is not necessarily always pure. But in this case, what's so fascinating is this whole obsession, and I can call it kind of an obsession that I've had with Swiss franc because I've been writing about it and tweeting about it, came on the fact that in the middle of the night, I heard Swiss francs. And not that that's a trading strategy, of course, but it's certainly a heads up to look at a chart when something like that happens. Well, I have no idea why my brain would have done that, but it did. And when I looked at it, I happened to look at it. What we're looking right now is at the weekly chart. When I looked at it, it was 2 weeks ago. So it was coming down sharp from the 50-week moving average, which is the blue. And during that period of time, the volume, which is about 30,000 a day on average, went up to 150 to 200,000 traded. And Dave, I know you know better than most that when you have that kind of volume on a descension or even ascension, it's often a blow off. Yeah. So that got me thinking, okay, time to look for a blow off bottom. And lo and behold, the next week we got more follow through. And as we've started this week, we're holding that 200-week moving average perfectly. So that means two things. Number one is you have a great risk point, and we're going to talk about the daily and why we're looking for a good risk point. And number two is if you go back to October, the last time we were down at these levels, almost the same thing happened. You had this massive descension. It broke at that point, the 50 and the 200 weeks were closer together. But nonetheless, we tested it. We came back, we held it again. We crossed the 50-week moving average the following week, and then we had this incredible rally. That's a nice run if you're going to catch a run in something. So let's take a look at the daily chart because it pinpoints it just a little more. Okay. So, you can see right here that in terms of the calendar ranges, we're way below. In terms of the moving averages, it almost looks like we're about to head into a death cross, but I don't worry about that too much when the price is so far away. What's more interesting to me is that we made a new low today on this move, and then we closed on the highs. That's a classic, whether you want to call it a glass bottom or a ceiling or a reversal bottom, however people like to define it. That is classic. However, it does need confirmation. And so the confirmation would be tomorrow, really. And that it would be is if it closes over the high of today, which I think was like 98.54, or gaps higher, then you have that risk to what we showed you, that 200-week moving average in the low of today. And the other thing is if we go down to the real motion indicator all the way on the bottom, you can see we had a mean reversion today too. So that's happening at the same time. So you need the price confirmation when you have the momentum change and you see a divergence like that. Just from a fundamental standpoint, real quick, what's interesting about this, besides that big spike in volume, is that the Swiss actually lowered their interest rates. And that's one of the reasons why the Swiss franc went down, just like, the yen, even though they raised, the yen didn't do it enough and the yen free fell, much to the Japanese surprise. But in this case, it actually followed in kind. And so if this means that we're going to see any kind of loosening of monetary policy, and the Swiss are any kind of example, this could be not only an indication of higher for this, lower for the dollar, but even another maybe nail in the coffin of why all of a sudden people should be much more concerned, as we've been sort of predicting, on a potential super cycle of commodities.
Really, really interesting. And from a technical perspective, really nice illustration of the multiple time frames, the weekly and finding that support. Then looking at the dailies, more the tactical read. I like that very much, Mish. Let's get to some other areas of the market. Solar stocks have been, I mean, noticeably range bound. What do you see when you're looking at the charts today?
Well, this is another area that has been, it was so popular a few years ago, solar energy, and then all of a sudden, especially over the last year, it's been more of the focus on oil and gas, and of course, just energy stocks in general. And so it has interested me that this has gotten so beat up that, again, I started trying to see, where would I get into this? And is this a really good opportunity to catch something that I believe will start to trend higher, particularly as we get closer to the election, and definitely probably would have even a bigger move depending on who wins the election. Obviously, a Democratic nominee and a Democratic election would possibly be stronger for solar, although it hasn't worked out that way as many pundits would have guessed. But nonetheless, getting to the chart right here, what interests me again on this is we have another bullish divergence, just like I showed you, except a little different. If we go down to the real motion, look at the moving averages. They are below the momentum, and yet on the price, we are below the moving averages. That blue line there is the 50-day. The one above that is the 200-day, the green one all the way up. And then if you see that red horizontal line, that's our January 6-month calendar range low. And it's been all over it. But what makes this really interesting to me right now is the bullish divergence, which we've seen before, is the fact that it's gaining some ground against the SPY in terms of the leadership. And if we get two closes, I think, over the 50 and the 6-month calendar range, which is about 44.22, then it confirms the bullish divergence, again, with a very low risk. If you want to hold on to this as we would plan to, then we would probably just take a risk down to under 40, thinking that this could easily work its way up at least to 50, and then we can reevaluate.
It's so interesting, the gap, I think, performance gap between sort of old energy and new energy. Nice sort of playbook on what we might want to see solar stocks reemerge. The last chart to look at, uranium. Uranium really has started to accelerate to the upside here beginning Q2. What do you see on this chart?
Well, again, and yes, I mean, I know Dave and I talked a little bit about this before. I didn't bring gold and silver and copper and all the things that I've talked about for the last couple of years, and all of that is happening. And I felt at this point, let's look at something different, but commodity related and also geopolitically related, because clearly there's been more talk about nuclear energy, number one. But with Iran in the conversation now, with Israel, we have to look at uranium, right? So there's your fundamental reason. From a technical standpoint, we cleared that 50-day moving average and look at how classic. Let's just go down to that real motion, because this is what we were talking about with TAN. We got the bullish divergence when the momentum cleared the moving averages. Just at the same time, we started to get the bullish, well, I shouldn't say a bullish because that's not a bullish phase, but it's the same time we got a move over the 50-day moving average. Actually, that is a bullish phase because we can't see the 200 there. Also, look at how nicely it held the calendar range low, that January red horizontal line on the bottom, so it found that support. And also look at now where the rubber meets the road. If this is going to continue, that green line above, horizontal all the way, is the 6-month calendar range high.
Right.
If you look at silver, we've cleared it. If you looked at GDX, we've cleared it. If you looked at oil, we cleared it ages ago. And if you look at a lot of the stocks, we've cleared it. If you really want to see whether or not uranium, this is just being dragged up with all the other commodities and some geopolitical talk, or if this is really a trend that's going to continue, I would see that have to clearing the 6-month calendar range high, number one. Number two is the February high was 32.60. And number three is you really have to go back to 2013 to see levels beyond 3260. 11 years ago was the last time uranium made some kind of an explosive move. And that's the kind of stuff that gets me really excited. And when something has been so dormant, but yet it's a raw material and yet is in a conversation, that could be another real parabolic move. And not such great consequences, of course, on the other side of it.
For sure. Thanks for highlighting uranium. You were agreed early on with the commodity rally that we've seen. We've seen it really continue to emerge in energy, in precious metals and elsewhere. We only have about 30 seconds left, Mish. As we kick off Q2, when you look at the broader equity environment, do you find yourself more optimistic, more cautious? What are sort of your general things to keep in mind as we're navigating the beginning of April here?
I'm still relatively optimistic. I just think what people have to understand now is you don't really want to be involved in companies that are going to be highly interest rate sensitive. We've heard a lot of Fed speak, and it doesn't look like rate cuts, even though people think they have to cut because of the interest rate payments that they have on our huge debt. Regardless if they cut or not, anything in this level of interest rates, companies that can handle and don't have earnings growth, I would avoid. But it leaves it open for so many other companies that we've seen done well in large tech, in large cap and tech stocks, but also in some of the small and the mid cap stocks. There are some stocks in that area that I think can really explode, especially if the earnings season turns out to be as good as a lot of people expect.
Yeah, earnings season just around the corner here as we kick it off. It'll be interesting to see what sort of catalyst that provides for risk assets. Mish, always a pleasure to see you. Thanks so much for sharing some charts and some insights with us. Stay well and be well down there in New Mexico. And thanks for the birthday wishes. Super kind.
Well, happy birthday.
Take care, Mish. That's Mish Schneider. Mish is the chief strategist at MarketGauge. Really interesting, and I like that the first set of charts looking at the Swiss franc. If you caught what we did there, it was looking at the weekly chart to identify some longer-term levels, and then focusing on the daily chart is more of a tactical read about how we trade around those levels. And I would wholeheartedly agree with Mish's comment there with something like currency ETFs with commodity ETFs. I think analyzing the underlying as much as you can be very valuable. Think of the ETFs as ways that you can add or gain exposure to those spaces, but a really nice illustration of using some of those proprietary tools from the MarketGauge folks down in Santa Fe. So check it out on ACP. The bottom right corner has a little plug icon. That's the way you can get more information on the MarketGauge plugins for stock charts ACP. Got to wrap the show, folks.